All right, hope everyone's doing well. It's been a couple weeks since I've done my last video. Was pretty busy last weekend with travel, so apologize for not getting the video out. But we're back, and I've got a fairly streamlined agenda today. Really just looking at Bitcoin on multiple high time frame charts. Going to look at MicroStrategy. Haven't done that in a few weeks. Going to look at the Bitcoin miners. Going to use WGMI, the ETF, as a proxy for that, and then we're going to wrap it up. I think what I'm going to start with today is a fairly different perspective I had explored a couple times last year. And so what I've got here presented to you is a 2-month chart of Bitcoin, kind of really zooming out, going back to 2013, forming what looks to be this type of ending diagonal type of structure. And what I have below it here is RSI. What I have below that is a logarithmic MACD. And what I'm really looking to illustrate, and this isn't my primary macro wave count. However, it's one that I most certainly have put together, and more so illustrates what I'm trying to share today in terms of what I believe is next. And when I mean next, the coming months, okay? And for all intents and purposes, if we just look at this 2-month chart and we look at the power behind the moves since going all the way back to, mind you, 2014, what are some of the commonalities we see with price appreciation and power behind that move as measured by relative strength index on the 2-month? What are some commonalities we see in relation to the behavior of price and the logarithmic MACD and the histogram, and where we are kind of today to set the stage for why I feel like this double top idea, folks not so sure of potentially where we're going. And again, reminder, I'm not a financial advisor. Nobody knows where we're going. I have very strong beliefs, have had them for a while in terms of where I believe we're going. The markets can decide. Anything you buy can go up, can go down, can go sideways. This isn't an endorsement to purchase anything. This is just educational videos, so do your own research, not financial advice. All right. So let's start with this concept here, okay? And the concept is, where did these moves, just measured by power, where did these moves gain the vast, or where do they experience the vast majority of their gains? If we look, and this is a 2-month chart, where do they experience the vast majority of their gains? And I'm not talking about looking at price. I'm just talking about looking at the oscillators. They experience the vast majority of their gains when the strength in the move went over 70, went overbought on the 2-month chart. And when the MACD, you got a bullish cross and the histogram started turning green and gained steam. They got stronger and stronger. And same thing in 2020 and 2021. And so where are we today? Where are we today? And the reason I'm highlighting this is the evidence is showing me that even though we have come a long way off the bottom, right? So 15, 16 to 70, that's almost a little bit over a 3x type of move. What has the strength in this move illustrated as compared to our previous 2 largest percentage gain periods in this asset class? Okay, what has this demonstrated? What has this demonstrated? kind of in that area. So a little bit conflicting, right? So the histograms really started to push after the strength behind the move breached 70. Same thing happened in 2020, whereas now we've got the histograms pushing, but the power behind the move just approaching 70. So a little bit different. Worth noting. Does that mean something? Maybe, maybe not. Maybe it does. And let me get to that in a second. So in my mind, when I hear and I see, potential calls for this move to go well into 2025, be the new super cycle, I just have to be very wary of that, because for now we've got, 2 touches, a third touch makes a trend, right? And so I have to be thinking about what happens in this area, if and when, right? Because there's no guarantee. These are lagging indicators. I'm saying as price, if price appreciates like I'm expecting it to, this breaks over 70, that's when the real momentum starts. And so let's just take an angle. Let's just take corresponding angles, so we're not we're kind of comparing apples to apples, right? Okay, so fairly similar there. So let's just say this comes out of here at the same fair trajectory as before in terms of the power behind the move once, if and when it breaches that overbought 70. So that would indicate a potential September-ish, late summer, early fall type of scenario where if it hits this trend line, getting up to that 84 on the overbought, then its corresponding price, I'm going to be viewing as whatever that is, as a potential area of a top, of a macro top. That's how I'm going to be looking at this, unless it does, right? Does a little breakout, something like that. Then the super cycle folks, then they get some points in their corner, and I'll be open to thinking about hyper Bitcoinization and institutions, nation states, and everyone's on board, and this is it. Even though I don't think that's going to be the case. So that's why I'm presenting this diagram for you. And forget that the way I'm counting this from an Elliott wave ending diagonal perspective. Just look at the, just looking at what price has done on a 2-month scale, right? You've got this area of a top that's respected. And then it busts through and, we make our first touch of this trend line. And then, we come back, correction, trying to take another stab at it, rejected. So, 1, 2, 3 rejections here, 1, 2 rejections here, and then a third, and you bust through. And so what do we have going on next? We've got 1 rejection, kind of come back down, all the way down, test a very important kind of support area on the 2-month chart, okay? And then we come back up, we test that for a third time, and its first attempt was rejected. Okay, first attempt was rejected. So we kind of have one of these kind of scenarios going on here. And so now, we consolidated, and now we're making another run at it. And right now on the 2-month chart, we're at all-time highs. Okay, 2-month chart, we are all-time highs. So in essence, it's broken out. It's somewhere, currently, and the 2-month hasn't closed, so this isn't decisive by any means, folks. So currently, we're somewhere in like that area as I'm circling on this chart, if the pattern continues. And so that's just bullish. Folks. That's all I got to say. I don't know. I can't look at this objectively and even say this is a 15-minute chart you know, what is this telling me? This is telling me that I'm expecting a third touch. I got one, I got two, I got three touches down here. I got one touch there. I got one touch there. I'm expecting a third touch up here. And if that happens in September, that's $248,646,000. Next. Next is the daily chart. This one I've been having a lot of fun with. Been calling the Ichimoku bear trap for a few weeks now. Given that we got to close back in the cloud within 3 days, that's the strongest indicator that I've seen going back since 2013 that a move, in fact, is a bear trap. And so far, that's the trap has been successfully executed, right? We had our move out of the cloud, 1, 2, 3, day 3, we're back in, kind of came back out, dribbled out, and here's where you want to see this retest, as I've gotten this diagram up here, a powerful move. Well, we didn't see a powerful move. We saw a powerful move that got retraced the next day, and then it dribbled, and just like Bitcoin likes to do, fool as the most participants as possible, it started looking weak, and now it looks strong, right? We cleared this entire congestive space where that green turns into red on the cloud, which is what you need to do quickly, mind you, that space before, you know, that red gets bigger and it turns more into a bearish looming cloud than more like a deviated anomaly. And so right now we're over it. We're over this cloud resistance. Are we out of the woods? Are we going to completely V-shaped recovery? That's my bias, but there's no guarantee. What does confirmation look like? Well, confirmation, there is no confirmation. There is no confirmation because, and I'm going to get to that in the next one. You know, a weekly close over 67, 68 starts increasing the probabilities. A close over, you know, the 127% retracement then takes expanded flat pretty much off the table. And so where's that? Let's see. Oh, wrong one. So if we go, we're going to go top to bottom. And so 127, and when I say expanded flat, because an expanded flat can fool you into thinking it's game on, that B wave makes a higher high. And so what does an expanded flat look like, right? You've got A, B, and then C, okay, prior to movement. And this area, that B wave, typically does not exceed 127% or the 127.2 extension of this move, okay? So that's what I'm measuring right now for you folks, is that. So clearing 78, 158 takes even the most complex type of expanded flat correction off the table. And so, you know, that to me is the highest probability confirmation. I know there's folks that have got 67, 68, which are completely valid, right? They want to see this area here cleared on a weekly, right? Because that's the move right there. That's the wave they're looking to exceed right there. And so that's what I want to see as well. I want to see the well. I'm just going a little bit further out on the curve and saying, like, because you still can get a move up to, right? You're doing something like that, and then A, B, C down. I mean, that could most certainly happen. Anything's a possibility. But again, folks, not my base case. I'm really, really bullish on the market right now. I just, I get asked to go through a bunch of different scenarios, and so that's what I'm doing. Here's another reason why I'm really bullish on the market. This is the this is the weekly chart, and then I've got this stochastic RSI up, okay? And there's a pretty powerful signal that if we go back to 2016, has showed up 1, 2, 3, 4 times previous to where we are right now. So 4 times previous to where we are right now. Let me turn this into line. I think it's easier for you all to see. Oh, Bitcoin's got to be orange, dude. No way. Let's go. Let's go. Come on. There we go. Orange, orange. Okay. All right, back to the exercise. And so what I've got up now is the weekly chart. I've got the 30-week moving average up, and the condition here that I'm looking to explore is when Bitcoin is above the 30-week moving average. So when it is in a stage 2 uptrend. And when it's in a stage 2 uptrend, I'm looking to identify hidden bullish divergence between price and the stochastic RSI on a weekly chart. Hidden bullish divergence is what? We know what it is, right? So you've got price making a higher high and the oscillator diverging in the opposite direction, okay? So lower low, price making a higher high. All right, so where do we find that condition? We find that condition in March of 2016. Okay, you've got the oscillator making a low, then you got the oscillator coming back in August of 2016 making a lower low, and then you've got a bull cross that occurred in August, and you've got price making a higher high. What did Bitcoin do from that point forward to its next local top? 2x. When did this hidden bullish divergence show up again? It showed up again in January of 2017. The oscillator made a lower low in March, so that's about 3 months. Price made a higher, a higher low. If I said lower high before, just get that out of your mind. Made a higher low. And so what we have here moving forward is we got a 20x return from that point moving forward to its top. Let's look at the next time that occurred, and we have to really go. I mean, these aren't very common, folks. So that was March 2017, and then we've got to fast forward all the way to August, July 2020. Same condition, forward return, 6x from that point. And then we've got to fast forward all the way to kind of where we are today in this phase of the market. And we saw that in the summer, where it really wasn't. I mean, this is a really weak hidden bullish divergence. You know, prices made equal lows, and then you had a lower low. On the oscillator, forward returns in that situation still ended up being 2.7x. And we've got that same situation going on right now, folks. We've got the oscillator made a low in January, made another a lower low, and just crossed bull. We just got a bull cross, and our price here is making a higher low. And so just another point of confluence. Is this guaranteeing that this thing is going to moon now? No. No, oscillators are all are backwards looking. They are not forward looking. These aren't things that tell you what are going to happen in the future, but they just, when stacked upon each other and you look at how the price reacted with common patterns forward, for me, it increases the probability of that same thing happening when those same conditions have preceded the price action, then demonstrated a very similar return afterwards. It just, for me, increases the probability that one could expect that same return moving forward. All right, next my count The way I'm counting this right now hasn't changed. I'm still expecting an extended type of fifth wave move here. I think the bottom is in. I could be wrong. Like I just said, I could be wrong. And where could I be wrong? You know, look at this flat correction going back to the summer. Price came all the way back. Let me get rid of this. So this is that 1, 2, 3 move, okay? So if we were looking for confirmation above 28,228, right? Because you got 1, 2, 3. A WXY is a double 3, and that's why I got it labeled WXY. So you've got the three-legged move here. You're looking for this move to be exceeded, that counter trend rally at 28. It did, but I mean, and you could have said that's confirmation that the correction is over. And I most certainly thought that potentially the probabilities were increased, the correction was over, but it wasn't. This ended up being, you know, you got your 3, and then we had another counter trend corrective move prior to coming back down. Okay. And so I only mention this now because of the length of that correction. And so again, even even something like this, you know, you could still, and this isn't off the table, right? This isn't off the table, a structure like that. That's always in play. And so for me, you know, and I drew that expanded flat before, right? You could be working on, you know, something like that, and then the expanded flat's just the most brutal, right? before a move. And so all those things, you know, you have to be considerate of. They're you know, in my mind at all times. But for now, everything to me is lining up. I look at the dollar, I look at the yields, I look at the traditional financial markets and price discovery. There's all, and this is called the wall of worry, right? As price begins to move into price discovery, you're thinking about, you're concerned about potential downside, and that's human nature. But that's good. That's good. There will come a time when everyone's euphoric, and euphoria can last a long time. And it's okay that people that have never been in the market come in and start doing well and seeing gains. That's a good thing, and that can last for a long time. I don't think we're there right now. I haven't had anyone in my real life ask me about Bitcoin lately, or even know what the price is, or let alone tell me how great of a thing it is. That's just hasn't happened yet. And so back to the count. I digressed a little bit there, folks. I'm sorry. Back to the count. You know, as I was talking about with the intro chart that I was presenting, this extended fifth could, you know, if I've got it here out to September, that's where I have it. That would kind of correspond with the data that I shared off the first slide. A powerful final type of impulsive movement. And so there we go, some more points of confluence. And I'm sharing all this with you so that you get, you know, kind of how I put the pieces of my puzzle together, okay, for lack of a better term. All right, and forecast hasn't changed, right? I'm still looking at a median target of 200K, you know, sometime before the end of the year. All right, next, let me close out of that. Let's do MicroStrategy. No, where did MicroStrategy go? We'll do the Bitcoin miners. It doesn't matter. Okay, Bitcoin miners. The miners, what's going on with the miners, right? Like, just very, very frustrating, I'm sure. Especially when you look at some of the action that we saw on Friday. I don't know. Was there some manipulation going on? Maybe after hours, some of them really started moving. There's some options that were expiring. I have no idea. All I know is looking at the price objectively, from an objective standpoint, what do I see? Do I see a powerful uptrend? No, I don't. I don't see a powerful uptrend at all. What do I see? I see a, oh, that's not what I wanted. I see a massive accumulation event. Okay. Massive type of spring event. And then I see a sign of strength. Okay. Consolidation above this entire accumulation rate. And this illustration may be right here. What you're seeing is the worst that you've ever seen me put on a chart. That is just awful. That's awful. That looks like a jock strap or something. I am sorry, folks. But you get the point. You get the point, right? This to me is just compression. That's what that looks like to me. What's the 30-week moving average doing? The 30-week moving average has been just flattening out, trying to form an uptrend. Hasn't quite done that yet. What's price doing around it? Well, in the summer, we had that nasty correction, okay? That nasty correction, and you breached the 30-week, and then it was what? 2.5 months of just consolidation misery prior to breaking out. Well, the good news here is this correction appears to be a flat correction, okay? Kind of like a running flat. And it's respecting the 30-week. You only had one close there and one close recently, the week before last, below the 30. And every week afterwards, buyers step in, buyers step in, buyers step in, right? Buyers step in when it breached below, and buyers stepping in here. And it's trying to, that's just telling me you're at a critical point within the market itself where the sellers are getting exhausted. Let's put up volume. Let me just see what the volume's doing us here. Volume, right? What's going on here? Volume is coming down as price is just kind of consolidating, okay? And that's what you want to see. That's what you want to see. What you don't want to see is volume going up as price is going down. That should have been the tell. That should have been the tell. You know, folks, we're always learning. I'm always learning. And as I'm talking and I'm doing this video, I'm learning with you. I didn't look at volume before I put this chart up. I'm always learning. I'm always trying to get better. And if you're not learning, you're not growing. You're not doing yourself a service, and neither am I. And so what am I learning from this? Where I thought this was an A, B, C initially, right? And we're trying to make a 1, 2 and come out of here. I thought these miners were set to make their move into April. And then that wasn't the case. I was wrong. And so I'm just looking at this saying to myself, what can I do? What's the tell here into this was the beginning leg of a corrective ABC, and that right here is illustrated on this chart below us. That's the volume. That's the volume. Increasing more sell volume than any other period in the history of this ETF should have been the tell. And when you get that type of volume of sellers, it takes a while for that to be absorbed, for the market to figure out, what they want to do with this, for new buyers to emerge. Those things don't just you don't just V out of those things. And so lesson learned for me as well. But that being said, what do we have? What do we have? What do I care about right now? What I care about is trying to project what's going to happen next. And as I always mention, right, most of the stuff is shares, which means I don't care. I'm a patient man. I'm a patient man. When I do options, it's the lower percentage of my portfolio, and I'm going, 6 months, 3 to 6 months out to plan for being wrong with a lot of this stuff. Okay. So we've got volume coming down, we've got price compressing, we've got a respect. The market is clearly respecting this 30-week, okay? Whereas here it did not respect it. That was a clear rejection and a lot of time under it. This correction is not the case. And so when I look at that, when I look at the volume, when I look at where we are sentiment-wise, when I look at the frustration that the market makers are potentially inflicting on participants, I'm just thinking to myself, this is the calm before the storm. This is the calm before the storm, and this type of compression in a sign of strength area is pre-expansive behavior. It's pre-expansive behavior, and so the next move for WAGMI from here, I expect at least 40 to 60 before any type of correction prior to moving up, and so that's a big move, right? 40 from here is a 3x. So maybe it's 30, I don't know, but I just expect a big move to be next, and I expect that to unfold over the next several months. So let's keep an eye on it and see where it goes. Last but not least, MicroStrategy. MicroStrategy is following the diagram that the chart that I've put up. This one I haven't had to make really many adjustments to at all, other than time. These were the projections from back in June, and so I most certainly had them happening a lot sooner than they did. But again, timing the market's nearly impossible. I'm okay with that, and at the end of the day, the move is coming to fruition. This to me is looking more like an extended third wave, whereas Bitcoin, I think, is forming more of an extended fifth wave. And so for me, I think the majority of the gains in this move, are going to be happening here, and this third wave price target of around 3,000. It could go higher. It could go much higher than that. I don't know, but I would expect some type of shorter fifth. You could always even get a truncated fifth. I don't know. But this third wave move is a monster, folks. This is a monster move. This is a monster third. In and of itself looks like 1, 2, 3, 4, 5 very well defined impulses. And so I would expect MicroStrategy to top out before Bitcoin does. And so just some words I thought I'd share there. Hey, that's it. That's the video. So I hope you all had a great, I don't know how long we spent, half an hour here. Have a great rest of your weekend. I look forward to doing more of these, and take care.